Canada's housing bubble just burst. And now the banks have started to back out. Behind closed doors, they are backing out of deals. And if you're waiting for some big, flashy announcement, let me tell you, you guys are not going to get one. They're just pulling financing, walking away from deals, and canceling loan approvals, telling entire condo projects to figure it out on their own. And this is how the collapse always starts. Hello folks, my name is Raluca MacKenzie, and if you're new here, welcome. And if you've watched some of my other videos, thank you so much for joining me again today on this video about the lending fiasco and how banks are leaving people hanging. So foreclosures, delinquencies, people crushed by HELOC debt, we've already talked about that in a previous video. But now there's the lenders. When banks decide it's no longer worth the risk, and that's exactly what we're seeing right now. I mean, you're not going to hear this from RBC or TD or CMHC, but I will show you what is actually happening because this whole thing is unraveling. And if you thought foreclosures were bad, believe me, this is even worse. Now, let's start with what's happening behind the scenes. Several of Canada's major lenders are pulling back on mortgage approvals. It is happening especially to first-time homebuyers and anyone with a variable rate renewal. Why? I mean, it's because they know property values are falling. Appraisals are coming in too low, risk is going up, so they're walking away. They're even doing it to fully pre-approved buyers. I mean, imagine this. You're shopping for a new home, you sign the deal, and then you get a call from your bank saying, I'm sorry, but the funding has been rejected. That's already happening to so many people right now. I've talked to multiple colleagues just this week who have seen it firsthand. Banks are looking for any excuse to get out of high-risk lending. They're rejecting appraisals, they're asking for way more documentation. The only thing they're not asking for people is their liver. And suddenly deciding that you need 20% down, not 10. I mean, that is not normal. And that is so stressful for buyers. Now, it's not just new buyers getting hit. It's also the pre-construction projects. Across the GTA, across Vancouver, across Calgary. Builders that were supposed to be fully funded by lenders are now getting dropped. Lenders who committed in 2021 are now backing out in 2025 because they know that those units are now worth far less than the original financing. So in other words, the housing bubble isn't just deflating. It is collapsing from the inside out. And you want to know how we know it's bursting? Well, CMHC just released a report showing the number of mortgage applications getting rejected. It is at a 6-year high. I'm showing a chart of that in my video. So even with demand being down, that's alarming. Fewer people are applying for mortgages, but more are getting denied. That means lenders are completely scared. They're tightening up and they're choosing safety over volume. When banks stop lending, the entire market freezes. And this is exactly what happened in 2007 and 2008 in the US. Long before anyone said the word crash, the banks just stopped lending. They pulled out of projects, they declined appraisals, they started demanding bigger deposits, and the people who were left holding the bag, I mean, just regular people, regular buyers, people who were told real estate never goes down. And now it's happening. You're not going to hear this on your main news channels. You're not going to see it on the Bank of Canada's Instagram feed. But if you talk to people in the field, whether it be real estate agents, mortgage brokers, builders, they will all tell you the financing is falling apart. Now, let me be really clear about one thing. This isn't just about Toronto condos or luxury properties. This is happening across all types of properties. It's happening in small towns, in second-tier cities, places like Barrie, Milton, Bowmanville, Kelowna, Regina. These aren't investor-only areas. These are places where regular families live, and the banks are saying no. Now, why are they doing this? Well, quite simply put, it's because property values have started to fall so much. And as prices come down, so do appraisals. That means that banks have to lend less. But that means more buyers need to make up the difference in cash, which, let's be honest, most of them can't. So what happens next? Well, deals fall apart and sales go down, listings pile up, and eventually the sellers pay the price. So we're already seeing that right now. It is now July, and the number of terminated listings in the GTA hit the highest level since 2017. And those weren't all just, greedy sellers trying to sell for $500,000 over asking. A lot of those were just financing failures, deals that couldn't close, or houses just sitting there on the market. And so this turns into a domino effect, and it has now started. So let's talk about the HELOCs, the home equity lines of credit. The quiet debt crisis hiding under this whole market. Canadians are carrying more HELOC debt than ever. It's over 170 billion nationwide. But the part that not a lot of people are talking about is banks can freeze or cancel HELOC access at any time. If your home value drops far enough, they can say, sorry, but your equity is not safe anymore. And they don't have to ask, they just do it. We saw it in 2008 in the US, and we're already seeing it now right here. Quiet HELOC freezes, especially on investment properties or cottages, are happening in BC and Ontario. And once this happens, your fallback is gone because you can't borrow more against your equity. You can't refinance, and you feel stuck. This is why banks pulling out matters so much, because they're not just leaving risky buyers behind. They're abandoning the entire middle class. The people who bought a home in 2018, 2019, or even 2020, thinking that they were doing the right thing. They were told to build equity, build wealth, ride the market. But now that market is turning, and the banks see it firsthand. So the banks start running. Now, let's not forget how much of this market was built on cheap money. From 2015 to 2021, borrowing was nearly free, and banks didn't care. If you had a heartbeat and a down payment, you were approved. But now that's over, and the only thing left holding this whole market up was the assumption that lending would stay strong. But it's not. The scary part about all of this is the government can't really stop this. You can't legislate banks into lending, and you can't make them approve people. They make risk-based decisions. And right now, Canada's housing market is one giant risk. They see the delinquency rate going up, they see the over-leveraged borrowers, and they see the HELOCs maxed out. So of course, they're going to pull back on financing. Now, I want you to think about what this means for the next 6 to 12 months. If banks continue to walk away from projects, if buyers can't close because of financing, if appraisals keep coming in low, then the market stalls. Prices drop, and then what? Well, if history tells us anything, it's that more sellers list, more buyers are afraid to do anything, and more panic sets in. Eventually, the big developers start to pull projects altogether. I mean, it's already happening across the whole GTA. And when that happens, we're in a free fall. There are already projects in Vaughan, Mississauga, and even downtown Toronto where units sold for $1,200 a square foot at launch and now appraised at $800 to $900 a square foot or less. That is a massive drop before closing. And guess who's on the hook? It's the buyer, who now has to come up with an extra $100,000 in cash just to close. No bank is going to lend you that. And if you can't come up with that money, you lose your deposit or you go into forced financing. So the banks know that these people are stuck. And so that's why they're trying to get out. This is why I said the bubble has already burst, because this is how it always starts. It's not with this big bang, like overnight, the market has officially collapsed. It is a slow, silent collapse. The people who helped fuel this market, the lenders, are quietly depriving people. And the people left holding the bag are just regular Canadians. So here's the question. If the banks are pulling out, should you? Are you still buying in this market? Are you planning to renew a mortgage this year or sell? Let me know in the comments. I want to hear what you're seeing in your area. And if you haven't watched my last video on the foreclosure wave that's already hitting Ontario and BC, please check that out next. Because that was the first domino. This is the second. And then there is a third coming. Please subscribe if you're interested in real estate market news and what is happening down the street from you. I'll keep showing you what's going on and show you the stats and data to back it all up. Thank you so much for joining me and have a wonderful day.